Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's January 9th, 2024. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down below into the description area and make sure you're signed up for our email distribution list so that way you can be notified whenever we post these videos. You'll also see which stocks are giving you overbought and oversold cluster signals at the bottom of those emails. In addition to that, we're heavy users of X or Twitter. If you're not doing so already, I would encourage you to follow me at Brandon Van Zee, and we really appreciate those of you that click like and repost on this Market Outlook related content. And then last but not least, we do have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and check out our next slide here. Just wanted to quickly address our sliding scale renewal discount that we have for our charter members. Those of you that joined us in 2018, hard to believe, David and I have been running Market Scholars for 6 years now, but it is true. So for all of you that were our early subscribers that first year and who renewed with us for another 3-year premium subscription in 2021, your expiration dates are coming up here pretty quickly. So we are once again doing this sliding scale discount offer. So if you do renew in January or February, we give you the best discount that we offer ever for our 3-year premium subscription. So for those of you that would have been eligible for this offer, you would have received an email from us on Saturday, but wanted to mention it here as well because I know these days people don't always read their emails. I'm just as guilty of that as anyone. So wanted to bring it up here while we were in this presentation and also mention it in my classes here this week as well. So if you have any questions on that, make sure you send us an email, support@marketscholars.com. But we hope to see many of you renew with us for another 3 years out to 2027. All right, let's go ahead and now jump into today's recap. And I wanted to bring up the heat map for the S&P 500. Here's what things look like today. It was a pretty calm day in the market, really not a whole lot of major movers. I would say if there was any sort of a theme, it was that the Magnificent Seven tended to do a bit better than the rest of the market here today. You can see NVIDIA had a very nice day. It was up 1.7%. Some of you might have seen my tweet earlier today with it showing an all-time high on NVIDIA. So as much as people have been complaining about the weakness in the market so far in 2024, NVIDIA is just one example of a stock that's literally never been higher than it is right now. They weren't alone in the Magnificent Seven. You also had strong performance out of Alphabet. It was up about 1.5%. Amazon also had a very good day, up 1.5%. Microsoft was up, but not tremendously. It was up just 0.29%. And then for a few of those that were down, Apple was down 0.23%, Meta was down 0.34%, and Tesla was the worst of the Magnificent Seven today, down just over 2%. So on the whole, I would say that the Magnificent Seven held up better than the rest of the market. As you look at all the rest of the squares that are not the Magnificent Seven, you can see that it's a little bit more bleak out there, a lot more red than green, at least from my eyes perspective. There were a few more green squares to at least mention here. Some of the bigger movers today. Palo Alto Networks was up 3.7%. I'll be curious on if the cybersecurity types of stocks will react to the news we heard this afternoon that the SEC's Twitter account somehow got hacked and put out a note that said that they had approved a Bitcoin spot ETF. And they had to quickly come out and say that was not us who did that. And so the market had a quick little reaction to Bitcoin spiking up by about $1,000 per coin, but then immediately gave that back once it was all cleared up that that wasn't actually true. So it makes you wonder, with the funny business going on there, maybe some of those cybersecurity stocks will be up tomorrow. So let's keep our eye on that possible theme. Another stock that was doing nicely today, down below here, Juniper Networks, a stock that is actually a pretty decent dividend-paying company, at least for tech purposes, was up 21% today. Not too shabby. This one was subject to a buyout rumor, and so apparently it's Hewlett-Packard Enterprises. Remember, there's two different Hewlett-Packards these days, but this is the Hewlett-Packard Enterprises apparently is behind the potential bid for Juniper Networks. So we'll see if that deal goes through or not, but Juniper shareholders are certainly quite happy today, up 21%. Other areas that were making it to the upside, I would say that ResMed in the healthcare space, up nicely, up 3%. Gilead had a nice day, up 2.5%. Interestingly enough, we just sold puts on Gilead yesterday in my options for long-term investors class. Remember, the core part of what David and I do here with our profession is teaching our premium students trading rooms every single day. And one of my classes is options for long-term investors, where our key focus is on selling puts on dividend growth stocks. And so yesterday, the class wisely decided to sell some puts on Gilead Sciences. And of course, we wouldn't have any idea that it would have a nice day the very next day, but hey, we'll take what we can get from that regard. So happy to see that one making a move here to the upside today as well. Uber had a nice day. It was up 2%, but that one has been struggling more here recently. So that's a little bit of a catch-up play there. Otherwise, now on the bearish side of the conversation, there's a lot more to choose from here. There's a lot more red than green on the screen. Here's one of your bigger down movers, and that was the aforementioned Hewlett-Packard Enterprise. If they are to be buying Juniper, Hewlett-Packard Enterprises stock sunk by 9% today. Remember, that typically happens. The company that's doing the buying sees their stock price go lower, and the company being acquired sees their stock price go higher, all else being equal. So that certainly held true here today. We saw some of the insurance companies like Aflac struggling today, down nearly 3%. A lot of those financials across the board were down. Your investment banking companies, Goldman Sachs, Morgan Stanley, even your big banks out there like Bank of America and JP Morgan and Wells Fargo, they all struggled here today as well. I would say that the energy area caught my eye for being consistently struggling today. Schlumberger down 3.5%. Exxon, Chevron, they were both down considerably today as well. Las Vegas Sands was down 3.5%. Been seeing some footage from the CES event in Vegas right now, but apparently that's not helping things for booking there with their company. Of course, these days, Las Vegas Sands probably driven a little bit more by Macau than Vegas itself. Nonetheless, some of those casino stocks, including MGM, Wynn, and others, were all down here today as well. All right, let's go ahead and pop on over here now to the main part of the platform and see what happened with the major indices today. By the way, if you were curious on the breadth numbers today, 145 stocks out of the S&P 500 closed higher today. So that was good for just 29%. So only about a third of the companies closing up, 2/3 closing down. So when you look at the end result of the S&P 500 down just 0.15%, I would say that we fared pretty well, and that again is largely credit to NVIDIA and Google and Amazon doing so well from a market cap perspective here today. So S&P 500 seemed to hang in there just fine, and it was an important day from a posture setting perspective. While the end result of the market wasn't particularly dramatic, you will see that the background color of the S&P 500 chart has changed back to that dark green again, or the bright green color there once again. And that is because this green intermediate line on the market forecast technical indicator is rising just slightly. You can barely make it out there with the naked eye, but that's why we've got these labels to help us see that a little bit easier as well. So it's at 74 and rising. So if it's between 20 and 80 and rising, we would consider that to be bullish. Once it's up above 80, then it's bullish whether it's rising or falling. So it had been falling below 80, which is why the background color turned pink. But today we had enough of a recovery yesterday and then held the line enough today where we were able to see that posture switch back over. So that's the good news there. Might as well talk about the NASDAQ now from the same regard. The NASDAQ was actually up today, by the way. It was up 0.09%. So not too bad of a day there for the NASDAQ. You can see it was also bouncing up and off of its rising 30-day moving average. It had a nice day yesterday as well. It was actually the best day for the NASDAQ in quite some time, several months. And so with us rallying from the lows today to close close to the highs today, that was enough to, again, pull that green line on the market forecast technical indicator slightly higher. It's at 55 and rising here. So that's actually setting up as not a half bad bounce opportunity there. Remember, tomorrow morning I'll be teaching my factor-based swing trading class where I teach bounce swing trading. And last week we had quite a good go of it. I refer to it as hitting the easy button when we get into a trade one day and we're out of it the next day. As swing traders in that class, we anticipate being in a trade for about 3 weeks. But every so often, if you hit it just right, you can get out sooner than that. And last week, it only took 1 day for us to get to our max gain price target. So let's hope to find another profitable trade tomorrow morning in class for those of you that will be attending. But some of them may very well come from the NASDAQ composite, because this is setting up pretty nicely as a bounce candidate from an index perspective right now, with today's move tacked on to yesterday's move. So both the NASDAQ and the S&P 500 back to a strongly bullish posture using the market forecast technical indicator. The Dow Jones was down today. It was down 0.42%. However, keep in mind that the Dow Jones just about a week ago hit an all-time high, whereas we have not yet seen the all-time high out of the S&P 500. So a little bit of good, a little bit of bad there. Today, a little bit of bad as it struggled a bit more than the S&P 500, but it really wouldn't take much for us to get back to all-time highs, probably just, 1% or whatever it is away from it. So we did retain throughout this entire move strongly bullish posture, and we have not lost it, right? The Dow is the only one where the bearish posture has not yet creeped into the situation. You can see that the green line is falling right now, but because it's still above 80, at 89, quite considerably above 80, it would retain its strongly bullish posture. We'll keep our eye on it. If it keeps on drifting aimlessly to lower, there's a chance that the bearish posture could creep in. But for right now, we want to give the Dow the benefit of the doubt. It's certainly still in an uptrend if you were to believe the 30-day moving average. Notice that the 30-day moving average on all 4 of these charts is green, telling us that we have it's telling us that we have price above a rising 30-day moving average, which is generally a strongly bullish feature to a trending market. Now for the Russell 2000, looks like the percentage went away. That happened 15 minutes ago, so let me pull up the ETF here to give you a sense of it. IWM was down 0.89% today, so I imagine that's pretty much what the Russell was down as well. So you can see right here that the Russell has been struggling a little bit more in the last week and a half and still has its bearish posture. Now this is considered weakly bearish, so it's not a tremendous situation there, but nonetheless, it is something that we want to keep our eye on. For me, if I want to get bearish on the Russell, I'd like to see its moving average broken. Right now, it's still resting above it, so for me, I want to give it the benefit of the doubt, but maybe that bearish posture is giving us a little bit of foreshadowing there on the small cap index. So we have strongly bullish postures on 3 out of our 4 charts, but all 4 of them are above their rising 30-day moving averages. Let's take a quick peek here at our asset class 12 grid. And as this pulls up, a reminder that the background colors of these charts will tell us what the posture is. So starting in the lower right-hand corner, you can see that the 10-year Treasury yield did rally slightly today. It's actually been in rally mode for the last week and a half. However, we still are in a downtrend. It's still struggling to get above its falling 30-day moving average in this case, which is why the moving average is colored red. But the background color of the chart is telling us that we have a weekly bullish intermediate posture according to the market forecast. So right now, we're kind of in an important juncture here, whether it's going to break that moving average and start this process of higher rates again, or whether it's going to use this falling moving average as an excuse to have that trend rejected and roll over once again. You'll notice that as Treasury yields have been rising, of course, bond prices themselves have been falling. Looking at the high yield bonds, they were actually up 0.16% today, and I actually kind of like the way The high yield bond chart is bouncing right now as well. This could very well be a bullish swing trading candidate for ticker symbol HYG for those of you looking for that sort of thing. You can see that the foreign markets struggled today. Notice that EFA was down 0.89%. That's your developed foreign stocks. And then the emerging foreign stocks were down even worse, 1.42%. In fact, some of you might have seen my tweet here just a moment ago. If I were to go to the global primary 12 grid here, I said on Twitter, one of these is not like the others. Now, it's not the colors. A lot of times when I say that on Twitter, it's the colors that I'm referencing. Instead, look at the position of all these different foreign ETFs out there and see whether they're closer to their highs than their lows. The vast majority of them are closer to their 3-month highs, but there is one notable exception to that, and it is a very important country, which is China. China is sitting here at multi-month lows today, down another 2% today if you were to use FXI as your proxy there. So China remains a house of pain, but there is still strength out there in Japan and India and a few other areas. All right, that's my 15 minutes. Remember, if you want me to get back on track with the hour-long versions, let's get our like count on Twitter up and over 100. We almost made it there last time around, but hopefully a few more of you can sign in and click like for us. Until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.